Good afternoon, traders. Nick Massandrea with Market Tea Leaves. I'm here speaking with Mr. John Karnas. John is the CEO of an outfit called Trend Following Trades. And John has basically come up with something that I consider to be very innovative, if you will, something that is worthy of mention, and certainly something that is worthy of paying attention to. John started off life as a trader, and then basically worked into being the chief executive officer of Trend Following Trades. And again, certainly in my mind, he's created something that I consider to be extremely innovative. This is a case in point. If you take a look at just one of his charts on Trend Following Trades, I mean this chart has got to be one of the cleanest charts I think I've ever seen in my life, and I've been trading for over 20 years. But one of the things that John believes in, and I believe is the philosophy of Trend Following Trades, is they like to keep things simple. They don't see the need to load the bus, if you will, with 15 to 20 different indicators, which I think in this day and age is quite admirable. But be this as it may, John, you have a mechanical engineering background, which is something I can relate to because I spent a number of years in manufacturing. I wasn't an engineer, if you will. I came from the the materials management side. But how did you get into trading, if you will? How did that all work out for you, John?
Well, Nick, first I'd like to thank you for taking the time, and your listeners for doing this interview. To answer that question, it's kind of crazy actually. I'm almost 50 years old, and I didn't know what a stock was until I was 30.
Wow.
So, having said that, I'm a child. My parents and my in-laws are what I call immigrants from Europe, so very conservative in nature. And I got into trading when I had an argument with my father-in-law. I knew a little bit about stocks, but he told me that mutual funds weren't stocks. And I challenged him on it, did some research, and found out that mutual funds were nothing more than a bunch of stocks, basket of stocks, if you want to call it that, with management fees. So then I did a little more research, and one of the gentlemen I worked with was actually a trader who I didn't know at the time. I didn't know at the time he was a trader. And once I discovered the concept of short selling, then the eyes lit up, a light bulb went off in my head, and I said, wow, this can actually be a business. Because prior to that, with mutual funds and things like that, you really could only go long. You had to have the market go up, and you had to buy it first and sell it later. You had a short sell, and the understanding of it is really what got me into trading.
Interesting. Well, it's true about mutual funds because you're not allowed to sell short. I mean, I think if they were a hedge fund, they might be able to do it, but a mutual fund, no. I mean, the only direction you can go with that is long. And, if you're going to buy one, it's one of those things where you have to buy it at a low enough level where it makes any sense, to say, all right, I'm going to buy this and, hopefully it goes up. So that's always kind of interesting. So you were, I guess, a retail trader, and then you decided to purchase TFT, Trend Following Trades, is that correct?
Well, actually what happened was when I started trading right after 2000, 2001, right after the first big correction, the bubble pop, if you want to call it that, I went through 5 years of major losses in trading. And, I bought into all the get-rich-quick schemes and things of that nature. So then I finally had a good mentor, but I still didn't listen to him. I thought I could be better than he was. I'm also a pilot, and private pilot with some advanced ratings, and you just can't be wrong when you fly. So that was kind of embedded into me. And the minute I realized that losing is part of winning in trading, I basically started from scratch, and started doing really well with no indicators at all on the chart, just the price, using Wick-Renko bars. And I developed one setup and stuck with it. Became very profitable. Taught my wife how to trade using that setup for about 3 years. And then 2 years into it, I started Ninja Trader is by far, as far as I'm concerned, the best platform as a day trading type of platform. We always used to follow some of the partners and just check them out to see what they had. And I got hooked up with Trend Following Trades and laid their indicators on my chart and looked over some of my past trades, and so many of them were in there. So I basically at that point said, I want to look into this further, and they were also looking for somebody to run a trading room. So we all got together, and I started running the trade room, and it worked for a little while, but then I wanted to take the service further. And I wanted to really develop into something unique and give back to the trading community all the experience and all the mistakes, if you want to call it that I made. And at that point in time, one of them was is a very good trader. Was kind of burned out with dealing with people. The other gentleman was an SEO advertising kind of gentleman. And they said, well, if you want to really take this where you want to go, they really wanted to be bought out at that point. So I essentially bought the whole company out.
Okay. Interesting. So, you mentioned before that that you taught your wife to trade, and I guess it appears as though your wife Sylvia works with you at TFT. How significant do you feel that was in your trading success?
Well, it's very significant because it wasn't just about my trading success. Basically, she was my first student. And I wanted to see if I could sit down and teach somebody, someone who you've been married 25 years, if you know, and over a period of time, somebody that doesn't really want to listen to you.
How true.
Or listen to what you have to say. That was my challenge. And, now, later on now she'll sit down for a few hours a day, trade, and be done, and, move on. She helps. She's a big part of this company with the administrative and finance side of it. And she trades, live, but she doesn't make it her life. It was something that she wanted to do. She likes to go out and, spend time with people.
Sure.
So she sits down in front of a computer and makes some good trades, and when she's done, she shuts everything off and leaves.
That's traders. You hear that? A trader's wife who actually trades with him. How incredible is that? That actually is very unique, John. If we could all get our wives behind us in that regard, I tell you, I think life would be a lot easier for us, without question. But there are some ladies out there that some of them trade and some of the husbands don't. So it's kind of a mixed bag in that regard. You never know.
I can tell you for sure that, and I don't, as a general statement, at least I can talk about my wife. Her ability to maintain discipline and to follow a plan and things of that nature were far greater than mine.
Wow.
In the beginning. So I don't know if it's a woman thing or if it's just her, but she was very disciplined and stuck to the rules that she created.
And again, I concur. That is extraordinarily important, without question. And you seem to place a lot of emphasis on a trading plan. Now, how important is a trading plan to the retail trader, in your opinion?
Well, I have yet to find a single trader that's an off-the-floor trader, which pretty much nowadays is almost everybody, succeed without a trading plan. I don't know of anybody. I'm sure there's some out there, but trading, is a game where, or a profession where 9 out of 10 people that try it fail, and the lack of a trading plan and following it is one of the big reasons. As far as I'm concerned, the trading plan is something that you develop, whatever service you may use. You back test it so that you can gain confidence that historically what you're going to trade moving forward has worked. That doesn't mean it's going to work moving forward, but if it didn't work in the past, there's very, very little chance it's going to work moving forward. So you back test it, you gain your confidence in it, you create rules for your plan, you trade in sim, which nowadays, some really great simulators, especially, with NinjaTrader, what's out there. You get consistent with that, and then and only then do you switch over and trade real money and start to deal with the hardest part of trading, which is real money emotions. So trading plan is extremely important, and it's the only place the trader can go back to. They get confused, if they get lost, if they're not sure about something. That's kind of like a trading Bible, if you want to call it that.
When you refer to back testing, how far back do you think a trader should go in terms of, taking a look at certain setups, or taking a look at, how something developed over time? Do they go back, 3 weeks, 4 weeks, 4 months, 6 months? Is there any, I guess, a minimum in your mind in terms of how far back this should go in terms of back testing?
Well, to me, what's more important as to how far back you should go, it's what type of markets you would back test.
Mm-hmm.
And we encourage all our members to back test a month
Mm-hmm.
at a time of a very fast-moving market, a market with a lot of range and two-way action,
Mm-hmm.
which essentially the last quarter of December 2012 offered a lot of that.
Mm-hmm.
And then I tell them, okay, now go to the other end of the spectrum where January of 2013, the market was very congested, very stuck in a high range, so to speak, and then try to find a time period of something in the middle, that had kind of a mix of both. So really it's about 60 days of back testing, trading days, but it's more one-third, 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 one-third of a lot of range, one-third of no range, and one-third of middle range.
Now, do you also put any kind of statistic in terms of number of successes? In other words, if you're looking for a certain type of setup and you go back 60 days, do you take a look at that and say, okay, well, 80% of the time, if I saw this type of setup, this is what happened after the fact? Is there any thought behind that?
Well, absolutely. The one thing you have to realize, though, is once you look at a chart in hindsight, it doesn't tell the real story. A lot of times, when people backtest, they don't take news into account. And I always tell people in the backtest, there's a nice website, forexfactory.com, that gives a lot of news graded as yellow, orange, and red. Unemployment releases, oil releases, all different kinds of scheduled news events. And you try to go back, and they offer historical, news events too. When you backtest, you need to make sure that you go back and look at when news was due and coming out, because we don't recommend trading into news, scheduled news releases. So you need to incorporate that in your backtesting, which can be a bit of a pain, but it makes it real. And then the other thing too is when you backtest, you don't really understand the speed of the market, or how quickly you might have seen a setup. So if you backtest something that has an 80% win rate, chances are you may get 2/3 of that real time. And that's what I've discovered, and one of the reasons that what's very important with what we do is the targeted 2-to-1 reward-to-risk ratio, where you only need to be right half the time to make decent money.
Now
although we backtest our setups and they have high percentages of win accuracy, if we make mistakes, all traders make mistakes, real money distractions, phone ringing or whatever, at least we can recover from losses. We don't need to maintain a real high percentage win rate. It just makes trading a lot easier.
It's very interesting you brought up the idea of not trading in the news, because that's something I always tell my followers at market tea leaves. Same thing. Don't trade into the news. I would prefer to wait, 5-10 minutes after the fact and see how the market reacts to it, before making any kind of decision. But I've known traders in the past who, what they would do is not only would they trade into the news, they would trade both sides of it. In other words, they would go long and short simultaneously on something, and I've tried that a couple of times myself in the past. You could very easily wind up paying both sides of the fence. In that regard too.
We would just rather sit aside. We trade into the news before the news, and we like to be flat a few minutes before the news. If you're in a position, we do believe in trailing concept. If you're in a position with profit, you've got 2/3 of your position off and you're just trailing, move your stop to break even. It's basically a coin flip, news reaction. So if it jumps your way, great. If it doesn't, at least you have profit in it, and you generally get out your trailer break even. A lot of the execution nowadays is pretty fast.
Yeah.
So you can exit a trade pretty quickly.
Now, in recent years, there's been a lot of talk about high-frequency trading, algorithmic trading, quants, dark pools. Everybody's got every week there's a new term for this. Do you feel that phenomenon is here to stay, or do you think it's something that's just a fad, or What are your thoughts regarding high-frequency trading and things of that nature?
Well, high-frequency trading, as far as I'm concerned, isn't just here to stay. It's probably going to be about 90% of the volume in the markets moving forward. Us included, we're developing auto trading systems which technically fall under the black box HFT umbrella, and it's a way that people can hide volume. Volume tracking volume isn't what it used to be. You used to be able to track standard volume and big footprint type volume, larger traders. Now everybody breaks it up. Instead of putting 100 lot in 1 second, you put 100 lots in every millisecond.
Yeah.
And obviously a computer's doing this because there's no way that human being do it. And they're using co-located servers on the exchange. So I think high frequency trading is here to stay, and we like it, to be honest with you. The one thing it doesn't do, because of the Renko bars that you have up on the screen now and the wick Renko bars that you scroll further down, is actually what we really like to use, because it shows where price has been within the Renko bar. It absorbs a lot of that noise. And one thing that I've done personally is back-tested the data that I could get from as many years back as I could go, if you want to call it tick data that would feed a Renko bar. And price action and price patterns really haven't changed over time. So the more volume, the more active the market is, the more we like it. Using the type of price bars that we do kind of clears up a lot of the HFT noise, the high frequency trading noise that's created. So I think it's here to stay. I think it's going to grow, and I hope to and intend to be part of it.
Yeah, the Europeans are saying the exact same thing too. I just had a talk with a very good colleague, and basically saying the exact same thing. It's growing in Europe, not as fast as it has grown here, but certainly it's making an impact. It's making a difference. Interesting you brought up regarding the chart itself, because the way I'm reading this type of thing, and again I think it's like very, again, as I said earlier, this is very, very clean. But it would appear to me as though you have, here we see like a downtrend, and we see these red bars, which I'm assuming are volume bars. But we also see, over here we see like red dots associated with these red bars. But now all of a sudden we're starting to see a green dot associated with a red bar. We also see that the Renko bars themselves are changing color. Is this an indication of a change of direction?
Yeah, I mean, first of all, there is no volume associated with anything that you see. Those red bars, it's an indicator we call MOMO.
Okay.
It's a momentum-based indicator. It's a hybrid indicator. It's not a squeeze indicator. It's got a lot of really sophisticated algorithms built into it, designed for trend trading, and recognition of things like divergence, standard divergence, hidden divergence, things of that nature. What you're seeing is, red is obviously sell on the graph on the bottom, the histogram. Green is buy, and then we have a price action channel up top, where when the top of it gets violated and closes, it turns cyan. When the bottom gets violated and closes, it turns indigo, and the light blue, dark blue color that you're seeing. And then the combination of the two gives us our setups and those signals that you see. Those signals are plotted and alerted, and that's generally where we take our trades.
Oh, okay.
So we try to keep it visually simplistic. We're trying to remove decision lock away from traders being too sophisticated. There's a lot of sophistication built in these tools. Don't kid yourself. Einstein's old saying that the ultimate in sophistication is simplicity.
Yeah.
So since trading is a visual exercise, we try to make it as visually simplistic as possible. And that the end result is what you see. And like I said, if you scroll down a little bit on that site there, you'll see the wick Renko bars, which is actually more of what we work with and trade. You can see where price has been. And then you'll see two horizontal lines in that histogram. That's something we call a chop zone. And that helps us as trend traders recognize when a market's not trending, and also when it's transitioning from buy to sell and sell to buy.
Interesting.
So, a lot of the signals are filtered out when they fire inside that area. So
basically, you don't necessarily look for a I guess a hard short or a hard long in terms of trying to guess where the bottom is or the top is.
No, no.
Yeah, and that's
We don't believe we don't believe in trying to pick tops and bottoms. And
right.
so many companies nowadays are putting so much money and effort into
Mm-hmm.
trying to figure out where the trend's going to end.
Right.
And I used to trade this way, and I'll tell you, after 10 months of trading I call it an outside-in trader.
Right.
We're inside-out traders, but trading from the outside in.
Mm-hmm.
I would watch a trend just go and go and go and wait for it to end.
Mm-hmm.
And then when you have areas of confluence or multiple indicators come together, you decide, hey, there's the trend's going to stop, and it's like trying to catch a falling knife.
Sure.
Some people are very good at it. The only problem with it is it's counterintuitive to my personality. When I was trading that way, I felt like I was fighting the world.
Yes.
All day long. I would watch this trend go and go and go, and I'm trying to, go against it.
Right.
So it has a lot to do with someone's personality as far as I'm concerned. And also the reward risk. I mean, I was able to maintain a high percentage win rate at 1-to-1. If I had a 10-tick risk and a 10-tick target, I would do okay. But, boy, if I had a couple losses, I just couldn't recover from it.
Yeah, it's true. It's amazing how those things add up over time, because especially if you're looking at a 10-tick gain, because you have a couple losses, and now all of a sudden, instead of a 10-tick gain, you've got a 20-tick loss.
Right.
And basically that just kind of adds up over time, and it's amazing how that works. So I guess having good trading rules and a good trading philosophy certainly helps in that regard, because you kind of know and plan, what you want out of the trade, where you want to get into it, where you want to get out of it, what kind of profit potential you're looking at, etc. I've run into traders all day long who basically say to me, or complain to me about a winning trade. And I would say to them, well, why are you complaining about a winning trade? Well, if I would have hung in there just a little while longer, I would have gotten another 15, 20 ticks out of it. I said, you made money and you're complaining to me. Do not complain to me, because you know what? If you wound up at the plus side of the column, at the end of the day, that's a very good day. That's an excellent day.
Yeah, I mean, we never know when the trend's going to end. That's why we like to trail.
Right.
As long as we possibly can, and then when all the other outside-in players want to get in, we just watch. And if the area holds and goes against us, so we get out of our trailer with profit. And if the area breaks, then their stops bring us to further profitability.
Sure, yeah, that's true. That's absolutely true.
We also teach mixed method, having a good understanding of all the different types of methods, outside in, inside out, breakout, counter trend, helps us in our decision making whether to take a trade. Whether to take profit at certain levels. We don't just ignore those people that do that and say, well, they're dumb, that's not the way you should trade. We know a lot of people trade that way, and we respect them for that, and we try to recognize those areas that they trade and just not trade against them.
Right. Interesting. Then, I guess you also do, I guess, coaching, some mentoring, etc. I know you have like a trade room, that's set up, that I guess you lead yourself. What do you say to traders who are, they're not necessarily trading, let's say live, if you will, they're paper trading or simulation trading, if you will. And what do you say to them when they say to you, well, I just have issues when it comes to pulling that trigger? I mean, a common, I guess a common drawback to live trading is, having the mental strength or ability or fortitude, whatever you want to call it, in terms of pulling that trigger. I mean, has that ever happened where people say, well, it's different because now I'm going from a simulated environment to a live environment. There's money on the line, and it's just getting so tough to pull that trigger. What do you say to them in that regard?
Well, I'll talk about the trade room in a minute, but to anybody getting into trading, any new trader, essentially when you come up with a trade plan, backtest and trade a simulator, it's nothing more than a video game. It's really what it is. And until you know that you have real money on the line, you will not know how you're going to handle it. And I can tell you that almost every trader I've ever talked to, including myself, when I went live, trading real money, well, I'll tell you what, you're going to find out all the inner demons that you have. And it's going to show in either wins or losses. And, the ones that succeed in the end are the ones that are able to identify their emotional issues and, recognize that they have them and basically conquer them.
Right, right.
From the last part on a trader's journey to success is learning to control their real money emotions when they trade. They are there, they are real, and they are strong.
That's true. There's never an easy answer for that. I just don't think there's ever really an easy. Look, I know I went through the exact same thing myself. Every trader does at one point.
I can tell you, I've spoken to people that trade other people's money, hedge fund managers and things like that, and they don't feel the stress anywhere near what retail traders feel because they're not trading their own money.
That's true.
It's not their money that they've saved up. It's other people's money, and they can absorb losses psychologically far easier than a retail trader. So, if anybody thinks they're going to get into trading and not have to deal with real money emotions, they will be. They will find out otherwise.
Well, that's true. The market is probably the greatest equalizer there is. I mean, I've known some folks over the years who've all said the exact same thing. It doesn't really matter what kind of background you have. It doesn't really matter, what kind of degree you have, if any at all. The market is a great equalizer. It doesn't really care.
Oh yeah, just because a lot of our students and members, they have great successes in life, and it kills them sometimes when they get started that they just can't turn this computer on and make money. And I tell them, it's just because you're a doctor or a lawyer or have successful businesses, does not mean you're going to succeed at trading. Because number one, losing is part of winning in trading.
That's true.
And a lot of people just can't lose. And that was my big problem at the beginning. Being a pilot, you lose, you die. Flying.
Yeah.
So, that I had a real hard time getting over it. And that's kind of what attracted me to the high percentage win rates, that were required in a lot of systems. Because, if I'm going to be wrong, I want to be wrong as little as possible.
Right.
And it was kind of a self-fulfilling prophecy to failure. And then I actually got professional help to find out, what my problems were psychologically that kept me from succeeding when trading real money. And I did find out what they were. Mine happened to be revenge trading, had to do with flying and being wrong. And I went through exercise after exercise, finally brought it out into the open, identified it, recognized it, and conquered it. Now when I trade, I take a trade, I feel, and this is very important, I think, that if the trade's a winner, if it's a loser, if it's break even, I don't feel any different. You don't see me jump up and down for joy when it's a winner, or any longer start throwing stuff around when it's a loser, because it's important that you consider it a business transaction, and it either went well or it didn't. And you need to move on, because once the trade's over, it's over.
That's right.
And you need to be prepared to get set up for the next trade that's going to come down the road.
Sure. So yeah, see, for me, it was what I used to do in the early days of trading. What I used to do was I would turn around and tell myself, look, even if I lost a trade or I lost money on a particular trade, I would turn around and say to myself, if I learn something from this and learn never to make that same mistake again, it's not a loss. It's a win. And basically what I would do is I would write down what I did wrong. I would keep a trading journal, and I would write down, what I did wrong, and realize after the fact, after looking at it, as time passes and looking back at it, saying, why did I make that bonehead move, But again, you're caught up in the heat of the moment, if you will, the passion of the moment. Fear and greed run rampant in the markets. And I think one of the traits of a successful trader is the ability to master their emotions, as you said. I mean, you don't get overjoyed if you win, and you don't feel particularly perturbed if you lose.
That's correct.
Yeah, and I'm pretty much of the same vein right now. I mean, I don't really have a lot of emotional tendencies one way or the other. If by chance I have an occasional loss, I'll look at it and say, okay, well, did I do something wrong? Yeah, I did something wrong. Okay, learn from that mistake. It's not a loss. It's a win, because you won't make that mistake again. And,
Yeah, and actually what we do is, we pretty much, like you said, we, highly recommend a trading journal with every trade. And we actually have a trading journal sheet, along with a trade plan that I trade in our members area. And the last column of the sheet is judge. And it's a P or F, pass or fail.
Oh.
And a lot of members have a hard time understanding when they first come aboard that the judge, the pass or fail, is not whether the trade succeeded or not. It's whether you followed your plan or not.
Sure.
And the worst thing that can happen to any trader is when they take a trade that's not in their plan and it works. Because if it works once, they say, oh, you know what? I got away with it, so I'm going to try it again.
Right.
And they take it again, and it works again. So now it's worked twice. And it's against their plan. It's completely against all their rules. And then all of a sudden, the real failure of the trade comes out in the next 8 trades.
Yeah.
And it completely destroys any progress that they've made psychologically in sticking to a plan.
Sure.
So a lot of times, I'll get these charts marked up, like you see there with arrows where people took trades and all, and and I get a, oh, it was a winner, and I put a big X around it, not a planned trade.
Right. Yeah, exactly. Yeah. That's true, because after a while, if they violate the, like what you say, they violate their own rules, and they deviate from the plan. Now all of a sudden, oh, wait a minute, I could do that. Wow, look what I did last time around. Wow, I can do that again. And they do it again, and it works. And then it becomes, like what you said. And all of a sudden, they'll do it again and again and again. And it'll be like eight losing trades in a row. They blow out their account, and all of a sudden, it's like, oh, they got to add more money, or they have to stop trading. I mean, there's no other alternative. One of the things that I am passionate about with my own folks is. I'm passionate about one thing. I want you people to hang on to your hard-earned trading capital, because the smart money will have absolutely no problem taking it from you, and they won't even bat an eyelash over it. They'll just do it in a nanosecond if they could. But my goal and objective with you folks is, hang on to your hard-earned trading capital, because trading is a business, and without trading capital, there is no business. I mean, that's pretty much what it kind of boils down to.
I totally agree, and especially all the scams out there, the $50 EA robots, get rich overnight, and all that. And a lot of trading services, they trade in sim in their rooms. They don't show their entries and exits with markers. They'll drag a chart in that's got all kinds of profit in it. You're trying to scratch your head trying to figure out where they get in, how'd they get in.
Right.
To me, that's all really negative in the sense of the development of a trader.
Right.
I'm not saying they don't make money. I'm not saying what they do doesn't work. I'm just saying they're not helping their members by, being secretive about where they get in and how they get in.
Or keeping
we believe in full transparency in everything that we do here.
Right. Or keeping a distance from it, or yeah, exactly, being secretive, if you will. It's
some traders that are successful have that feeling and opinion that what they have is unique and special, and they don't want to share it with anybody.
No,
and they become part of a trade service, or they run a trade room or whatever, and they are a bit elusive, to be quite frank. And but people want to follow people that succeed. So as long as they see this person making money, they'll stick around, and they'll try to figure it out for long periods of time.
Sure.
That's what I did.
Yeah.
I'm speaking from personal experience, and I finally started to realize that when I started to ask the right questions, to show me your entries, and they wouldn't. Then I start to ask myself, well, are you really even trading, or do you have 2 charts, one going long, one going short, and whichever one wins, you bring in? And I found out a lot of people play that game.
Yeah.
And that's not, we're not about that. And I strongly encourage anybody that gets involved in any trading service or whatever, that you really try to pull out the good from the bad, the dishonesty from the honesty, and the sincere from the people that really are just looking to make money off subscribers.
Right. Exactly. Yeah. I know. That's always a challenge. You wonder half the time, okay, how are they really making all this money they say they're making? You never know. It's unfortunately, it's trial and error in that regard. It's almost like banging your head against a wall a few times and realize, oh, gee, that doesn't work.
Yeah, and we also, when I bought the company out, I changed some of the pricing structures to one philosophy that I always had was you have two types of companies out there that sell tools. You either have to lease them for life or you have to buy them right away as a lifetime member after a week trial or whatever. And I don't believe in a week you can trial anything.
No.
So what we do is we offer the ability to lease and purchase later and get credit for your recurring lease payments towards the purchase price.
Nice.
So we really want to get traders that want to be here and that like what they see and they're willing to work hard. I work for every hour a trader works. I work an hour with them.
Sure.
And it's something that's worked out well. We're coming up with something pretty new, which is in development. That's what you see on the website in the beginning. It's our mission statement now.
Oh yeah, sure.
That we're going to be developing. It's no longer a market analyzer. It's far beyond that. We're going to take some of NinjaTrader's capabilities and use the market analyzer as a feed pump, if you want to call it that. We're going to fill with instruments and data, or indicators, and we're going to create a custom, kind of like a spreadsheet. But really, what it's going to do is, right now, people pick one or two markets that they like to trade, or they have a whole bunch of charts up. And what we want to try to do is we want to try to get away from that and not force you to have to trade a market when you're trading that isn't trending. So we want to come up with something that's in the works as we speak that will identify with our own tools and our own criteria before the trade sets up or before it executes during the setup that in this market there's a trend following trade setting up. And you'll be able to identify the market, click on it, charts will pop up and take the trade. So we're no longer going to be locked into the Russell or oil or gold or currencies. We're going to have them all. And they all trade the same way. They're all executed the same way. They have their own little personalities, but again, the Wick Branco bars that we're using smooths out a lot of that personality and gives the very same look throughout all the different markets. So the goal is, if you got 2 hours of trade, take the very best trades that's set up in each market, not try to find and dissect the market and try to find a trade in a specific market.
Interesting.
That's exactly. And the box you see to the right is everybody. We don't spam people. We don't shoot emails every day. It drives me crazy. I get so much junk mail from people that they show all winning trades. They never show a losing trade. You opt into that box. The only time you're going to get emailed is when we have an announcement, a webinar, which happens once every few months. To quite honest, if you want more information, you go into the contact tab. And, if you want some immediate information, that's the way to get a hold of us. That opt-in is more for new things that are coming out.
Yeah, it's kind of interesting, John, because I think one of the things that attracted me to your particular solution, and even when I look at your charts, it pretty much spells it out. You're not an advocate of scalping, from what I gather.
No.
I'm not. I don't advocate it either. I never believed in the concept. Going as far back as late 1990s. I knew people that back then they would scalp something for 2 points, 2 ticks, 3 ticks. And I'm saying, why? You got to put that much effort into something in terms of developing a trade. Why not do it in tandem with a trend?
The trend, big money creates trends. Money flows going in and out of stock markets affect futures markets. They're all arb together. So, money creates trends. And our goal is just to try to hop on that trend and ride it for as long as we can. We take profit along the way. We don't believe in all in, all out when the trend starts and ends. We take profit at a 2-to-1, our initial risk, and we hit 2 times that. We encourage people to remove 2/3 of their position and just trail the last third. But it drives me crazy. I've sat through webinars and people actually buy into this where, trade for a tick. A tick can change your life. I can tell you, you trade for 2, 3, 4 ticks. There's commissions involved. They say, well, get good at that and then start adding size. Well, unless you're trading the ES, you start adding size to make a real living. And I'm not talking about, making $50 or $100 a day. I'm talking about making thousands of dollars a day.
Yes.
You need to either be trading a lot of size and be right almost all the time, or trade less size and capture larger moves.
Yeah, exactly. Yeah, exactly. And that's kind of what my mindset was. I mean, the only way that I could see making any kind of money in terms of scalping was you got to be trading a lot of contracts. 10, 20, 30, what have you, contracts. And it's like, most retail traders out there, they're not equipped to do something like that. And I don't necessarily know that they even have the desire to want to do something like that because, you look at it and say, okay, well, I'm going to do it for a 2-tick profit or a 3-tick profit. That means that if you're trading with a stop loss, it means on the back end you've got to be trading with, a 2 to 3 tick, if not more, and certainly much more as far as the stop loss is concerned. If you're trading a large number of contracts and that stop loss gets hit, that's going to affect your pocketbook. That's going to affect your count. That's going to affect your account size. It's going to affect your pocketbook. And to me, I don't know, it just never made any real sense. I prefer to say, the 2-to-1 ratio, makes a lot more sense to me.
And that's a targeted 2-to-1. I mean, we obviously look at support and resistance.
Sure.
If it's in our way, we make a choice. We either don't take the trade, or if it's near our profit and just a little bit shy of that 2-to-1, then we'll remove contracts at that area. And number one question I ask people is, why are you getting into trading? And the number one answer, and it's really the only truthful answer, is they want to make money.
Whole world wants that.
Well, why else? And I try to explain to them, good, that's great, that's a good goal. You want to make money, just really don't think that you're going to make money making a couple of ticks on every trade. Even 4 or 5 ticks. Your goal should be to make more. And and as you get better, then try to increase your win percentage while making more. Some services out there I've heard actually try to get you to trade and then decrease your target size to increase your win percentage to your like 85 or 90%. Sometimes that only means making 2, 3, or 4 ticks, and I just don't understand that.
No, that's crazy.
Emotionally and psychologically, it is so difficult to maintain such a high win percentage. You shouldn't have to do that. You should be able to be wrong half the time and still make money. And that's the whole philosophy. We're not saying that we are, but starting out, you're going to make mistakes. Trading is a difficult game.
That's true.
Remember, it's less than a zero-sum game. Every time you go long, somebody else is going short.
That's the truth. That's the truth.
Who's the better trader? And we try to keep we talk about gambling versus trading. We always try to keep mathematical odds in our favor, like the casinos do. They never lose. So if you keep over periods of time, so if you keep mathematical odds on your side, you have a much better chance of being successful.
True. It's funny because I guess a common acquaintance of both of ours, once turned around and told me, and I asked him, I guess it was last month, the last time I talked to him, I said, you're European, all right, and I know you've taught trading classes in Europe, right, and what are your, what do you see are the major differences between a trader in Europe and a trader in the United States? And he said, that's a very interesting question, and here's the answer. If I ask a trader in Europe why they made that trade, they can give me 3, 4, 5 different reasons as to why they made that trade. And it'll all be very good, logical reasons, etc., as to why they made that trade. If I ask someone, in North America, or even more specifically in the United States, well, why'd you make that trade? And invariably, the answer is going to be, it felt good.
Yeah. gut feelings in trading don't serve. At least they haven't served me well.
No,
I can't make absolute statements, and we disclaimer all of our the entire website and company as much as we can, because we are really teaching and trying to really teach people the concept, methods, trading. A lot of the times we trade real money, almost matter of fact all the time.
Sure.
In the sessions we do, we still use those government disclaimers that don't trade any with any more than you can lose. Don't trade mortgage money. There's reasons, but disclaimers are out there, and I think people really should stick to them.
Oh yeah, definitely, without a doubt. What advice did you give to the new and novice trader? And invariably, I always run across this. I do a lot of discussion work on LinkedIn, etc. And invariably, I'll see all these folks out there say, "Oh, I'm new to trading." I don't know anything about it. Where do I get started? Where do I begin? And I guess the question is, what advice would you give to the new and novice trader, somebody that doesn't really know very much about trading, except that they think that the computer turns into an ATM?
Right. Well, the number one thing I could say to a newer novice trader is keep your expectations realistic.
Mm-hmm. Mm-hmm.
Too many people have unrealistic expectations of making big money, and what I try to tell people is if you want to make the money of a brain surgeon or a lawyer or a doctor, you're going to have to put the same amount of work in when it comes to trading also.
Mm-hmm.
And what other people say, well, you know what, I just want to trade a couple hours a day part-time, make a few $100 a day or whatever. And I tell them, and they get turned off by it. They inevitably go somewhere else where somebody tells them what they want to hear. But we tell them very brutally, you're still going to have to go through just as much training, and still going to have to understand everything that everybody else understands. If you want to make $10,000 a day, or if you want to make $100 a day, you need to know the same amount. And you need to maintain consistent profitability, and you need to understand trading, learn it, execute it. And that's really the truth. Don't have unrealistic expectations. Keep things visually simplistic. Try to stay away from all fancy, sophisticated indicators. We believe in keeping math on your side. Don't fight mathematics. You'll never win. Math is math. 1 + 1 = 2.
Yeah, that's true. Last I heard.
You're never going to change that. So, and realize that, somebody might tell you their win rate and everything like that, but once you get into doing it, and especially when you trade real money, that your percentage win rate, you will make mistakes, it will drop. So we use the coin flip analogy. We only have to be right half the time at 2 to 1, and still make decent money without trading, ungodly amounts of size and taking, more risk than we should be out of our account size. We don't promote taking more than a couple % risk of your account on any trade, and having some really fixed daily stops in case you have lose in a row. You don't want to pull your account in the day.
Right.
So it's really money management and psychology, as far as I'm concerned, is 90% of trading. Whether you want to just make a little money or whether you want to make a lot of money, you need to understand that, and you need to understand that you will have setbacks. No matter how good you are at anything you do in life, the market will humble you. I guess is the best way to put it.
That's true.
It will teach you that it is right most of the time.
Yeah, well, it's a great equalizer, without a doubt.
Oh yeah, you said you use that term, equalizer. I love that term.
Yeah, the great equalizer.
Yeah, I like to use the word humbling because and prior to me getting into trading, I was never wrong, and and then all of a sudden I was always wrong. And boy, I'll tell you what, you want to talk about
that's a humbling experience. Yes,
it sure is. But once you realize that and can wrap your head around it, then you can start to go through the state of you're beyond denial. And a lot of people when they have no more money, they're still in denial. And once you get beyond that and recognize that there are trading is a psychological game or a profession, that if you're willing to address it and admit the issues that you're having. I deal with traders all the time, and once I can get them to admit what their problems are, then I feel, I see the results improve. We talk things out. We try exercises, things to do. I have one trader that every time he loses, he pays his kid $1.
Wow.
And, I'm sorry, every time he makes a trade not according to plan, he pays his kid $1.
Ah.
So in the beginning, his kid was very happy.
Yeah, of course. Hey, keep on losing, Dad.
Yeah, that was the whole thing. And every time his son was happy, he was mad.
Right. He wasn't making money.
The fact that he was happy was because he was giving him so much money.
Well.
So there's a lot of different things, exercises psychologically that you can do to really get control of your emotions.
Interesting. Yeah, you put up a very good point there too, John. I think all too often a lot of folks view this as, I only want to trade like a couple hours a day. Nothing really big, just a couple hours a day. What they don't understand is that, liking what you said, there's work involved in terms of doing this. You still have to study, you still have to prepare, you still have to, take a look at the markets, you still have to take a look at your charts, you have to do your analysis. I mean, all those types of things go into it, and most people just don't understand that. They just think, well, just trading stuff, it ain't work. It's not work, it's that's not really what I mean. Then I turn around and tell them, hey, look, walk a week in my shoes, and then tell me how much work is involved.
Oh, yeah. I mean, it's a lot of work, and we're trying to address that. That's why we're coming up with something unique that I really don't think exists anywhere else, and if it does, I sure haven't found it. And that's trying to develop a way to identify the markets that are falling into place with our setups, and then pulling that market up and taking trades in that market. And we don't care what it is. We don't care if it's wheat, corn, or toilet paper.
Right. Exactly.
As long as it's tradable, chartable, and liquid, and has tight bid-ask spreads, and the tick value isn't $100 a tick.
Right.
We should be able to trade it.
Yeah.
Price patterns are price patterns, and these indicators work on all markets, and that's where the direction we're trying to head. And with that, you talked about something at a trade room before. We no longer have the trade room actively.
Okay.
There was very little participation, and I couldn't trade my size, my full size in the trade room because I was limited to one monitor.
Oh.
And if I couldn't show my entries and exits, I didn't feel comfortable about it. So, when I trade on 5, 6 monitors with multiple charts up, and I'm scanning them back and forth. You can't run a trade room and do that. So,
right.
I want to bring the trade room back, and I want to do it with this quote market analyzer. We don't have a name for it yet, but we'll find one. And so that we sit down for 2 or 3 hours, the markets that show the very best trades is what we're going to trade.
Interesting.
So we may be able to change the dynamics of that a little bit, but it's not there yet.
Interesting. No, that's obviously good to know. Well, for myself, I mean, that's pretty much what I had. Any final thoughts on your part, John?
Just that I believe the traders aren't born; they are made. I believe the ones that succeed are the ones that truly put the work and effort into it, and understand that you don't get rich overnight. It's being honest with yourself. I guess if I can say one thing to any trader is be honest with yourself. If it sounds too good to be true, it probably is. Use some common sense and realize that these markets are being traded by seasoned professionals that have been around for a very long time, and now they're taking their knowledge and putting it into computer programs that trade in milliseconds, if not nanoseconds.
That's true. That's true.
You need to compete with that, and you can beat that. You're not going to beat it all the time. It's just to make sure that when you're wrong, it doesn't hurt too much, and then when you're right, it makes up for the times you're being wrong, plus a little money in your pocket.
True.
So that's kind of our philosophy, and I commend anybody that tries to get into this industry. I just hope that they don't buy all the spam mail of overnight, buy this $50 EA, and expert advisor. I guess I should use that term.
That's true. That's true.
Without some type of company and real people behind it.
Interesting. Well, folks, that's our talk with John Karnas from Trend Following Trades. We trust that you got something out of this, and I know from my own perspective, this is very enjoyable, and I definitely enjoyed the talk with you, John, without a doubt. And I'm certain
I thank you for having me, and good luck, traders out there, and hopefully anybody that gets involved in this industry is blessed with success.
All right. Thank you much. You take care, John.